Has a new bull market started? Well, that's what the headlines say. That's coming up on 3 Minutes on Markets and Money. As we've discussed here recently, the markets were due for a rally after extremely negative sentiment, extremely negative positioning by fund managers and hedge funds, etc. All really gave the market fuel for this rally. Again, extreme negative sentiment, extreme bearishness means that basically there's no sellers left to sell. So buying frenzy is certainly not unlikely in this type of a market. And that's what we've been seeing here for the last few days. Now, markets have had a very nice reflexive bounce off this bottom. And headlines now, as we've talked about before, there was too much bearishness to have a bear market. Now headlines are back. A surge in headlines saying a new bull market has started. You've got to get in because the market's now predicting the Fed is going to pivot. However, the Fed is not saying any such thing at all. In fact, just yesterday, St. Louis Fed President James Bullard came out and said, hey, we're going to be hiking more as we continue to fight this inflationary fight. And the interesting thing here is that a rallying stock market and declining credit spreads shows there's no financial instability in the market. So again, this gives the Fed plenty of room to continue their inflation fight. And remember, the majority of these interest rate hikes by the Fed and quantitative tightening, which now just hits its real full stride of $90 billion a month in August, that hasn't even been reflected yet in the markets or the economy. There's about a 6 to 9 month lag time on those actions. So a lot of those actions won't even show up until January of this coming year. So again, a lot of the impact here not reflected. Now, Sentiment Trader yesterday came out and said, look, another bullish sign here for the markets. The number of stocks above their 50-day moving average certainly portending to better returns for stocks historically have marked bottoms in the markets over the last decade or so. And again, I hate saying this time is different, but there is a difference this time as the Fed is focused on fighting the highest inflation level in 40 years. Again, we have not been in a market where inflation has been running at 9%. There's really no sign here that inflation is going to drop sharply over the next several quarters. They're going to gradually decline here. The Fed's going to continue to hike rates to fight that fight, which is all going to impact earnings and economic growth later in the quarter. So again, one thing that the markets have not factored in yet is the slower economic factor that will come from higher interest rates, tighter monetary policy as we get into 2023. That's 3 minutes on Markets and Money. We'll see how this bull market sticks. We'll see you next time.